Start big picture here, Ken. Your thoughts on the market, where we are and where you think we're headed.
Well, nice little bungee jump we had yesterday, right down, right, right back up, almost recapturing all those points yesterday. Look, I thought it was overdone. I thought it was overreaction. The Fed governor said, I penciled in. Okay, maybe it's not ink, but pencil's pretty good enough anyway, that we may see 2 rate cuts. Look, I've always been in the camp that be careful what you wish for. We don't want a whole bunch of rate cuts because that's accompanied with slower economic activity. Look, we saw the volatility index lift. Remember, the VIX is interesting. Doesn't really give us the direction, but it kind of shows complacency versus, hey, we're trying to put some hedges out there. It's telling you that, hey, things get a little bit dicey in the macro, geopolitical, but I do think some of these concerns are going to ease a bit when we get to the 3rd, 4th week here in April, when we start reporting the first quarter numbers. And I expect a lot of technology companies to beat and raise guidance. So look, it's possible to have a 2-tiered market, kind of like, hey, it's a tale of 2 stock markets, technology and everything else. I think technology doesn't really mind whether you have a quarter point cut or don't have a cut. Top line growth is what's going to attract investors. So I think, yes, it's important that we follow this, but I think for those growth investors, which we are, we don't really care so much whether we get a June cut or not. We care more about the earnings picture and hopefully find a lot of those companies that beat and raise guidance.